Eric Jackson says arguing about AI demand is not a real story anymore, as NVIDIA, BitDeer, Core Scientific are defying the AI cooling narrative. I'd like to get opinions from the group on where you're at with the cooling AI narrative. The prevailing sentiment that artificial intelligence is, quote, unwinding is fundamentally incorrect. That's according to EMJ Capital's Eric Jackson, who argues that capital is instead flowing deeper into complex energy and capital cycle. While retail sentiment may suggest a cooling period, institutional movement tells a different story. Quote, everyone is arguing about AI demand, and that's not the real story anymore, end quote. Jackson points to Nebius Group, ticker NBIS, raising $3.7 billion in convertible debt and heavy call buying across AI infrastructure players like NVIDIA, NVDA, BitDeer Technologies, ticker BTDR, and Core Scientific, ticker CORZ, as evidence that the sector is maturing rather than retreating. Quote, capital isn't leaving AI, it's flowing deeper into it, end quote. He emphasized that the market is moving away from the simple question of who has AI to a brutal assessment of who survives the structure. And I know we're going to have Tim on here pretty soon. Tim has been saying that we are in phase 2 of the AI build out, where things are going to change from phase 1. I'm curious to get his opinion on where he stands with all of this. This transition marks a shift where software is being questioned while physical infrastructure and debt-backed expansion becomes the primary driver of value. The narrative that AI is a standard tech cycle is being challenged by physical constraints. As diesel prices climb and coal plants remain online to prevent blackouts, the bottleneck for AI growth has shifted from interest to availability. NVIDIA recently signaled that supply, not demand, is the primary constraint for the industry. This evolution has transformed AI into a resource war. Data center buildouts and nuclear energy integration are accelerating to meet the power-hungry needs of the massive compute clusters. Quote, it's becoming energy plus capital cycle at the same time, end quote. Goes on to finish it off and said, and those don't unwind cleanly. For investors, the current volatility isn't a sign of a bubble bursting, but a filter for quality. Jackson argues that AI hasn't killed companies yet. Rather, it has exposed who is fragile. And this also plays back to our talk about software and the SaaS apocalypse headlines that was getting thrown around there. Sure, AI is going to change a lot of this, but is it going to kill everything? Doubtful. As AI infrastructure consolidates, the winners are those who secure the rails, much like MasterCard's recent move into stablecoin infrastructure. The demand remains the same, but the industry is now identifying a new tier of different winners capable of weathering a high-debt, energy-intensive landscape.